for those of you who don't know, I'm an investment consultant. I'm an investment consultant with the Los Angeles branch of EuroPacific Capital. We're run by Peter Schiff, who was the economist, economic advisor for the Ron Paul campaign. Anybody here vote for Ron Paul? Know about Ron Paul? You guys? He's good. Ron, good. He's a good man. I think his son. Anybody know what's going on in Kentucky? Is he winning? Rand Paul.
There's been some controversy in the last couple of days.
Has he? What's been going on?
This video came out basically that this Rand Paul supporter was kind of kicking this woman from MoveOn.org in the
kicking?
head. Yeah.
Physically kicking?
Yeah.
There's been stuff with that.
So there's definitely some. I mean that campaign right now is like it's kind of gotten into the gutter with Conway, and it's.
Who's leading it?
Isn't he like killing? Isn't he like destroying?
No,
like,
no. It's like 5 percentage points.
Yeah.
Really?
Wow.
Yeah. So,
Well,
it's.
In any
We'll
event,
see.
We'll see.
Yeah.
Hopefully, they can keep it at a philosophical level and not get too dirty. So obviously, we have a weak economy, right? We have 10% unemployment. We have, I think, barely 1% GDP growth. It's been decelerating for the last 3 or 4 quarters. There's a lot of debate as to whether or not we're going to head into a double dip recession. So more, higher unemployment, even less economic activity. And there's a lot of debate about, okay, what should we do about it, right? So this is the kind of the topic for tonight, Keynesian economics versus Austrian economics. As I said a few minutes ago, I was an econ major at UC Berkeley. I used to fall asleep during lectures because these guys would just, they're all good people and everything, but they drone on. And so I didn't want to start off with a debate. I wanted to start off with something real, which is jobs, because ultimately that's what people, I think, really care about. They want, if you're a college student, you guys, these are all seniors or what age? Seniors?
Third year.
Graduate about to break out.
That's what I'm saying. You're going to graduate either this year, next year, whatever the case is. Or if you're unemployed especially, unemployment right now is at 10%. That's just the official measure. The broadest measure of unemployment is at 17%. In California, it's probably 20%. So this is a lot of people that are out of work. Even for people who have jobs, you might not be happy in your job, you might want to change jobs. Jobs are kind of the thing that when people are interacting with their economic system, their job, what they do for a living is the first and kind of the most important interaction on an economic level with the rest of society. So that's what I want to talk about first. The Obama administration, almost a year ago, several months ago, I think it was in December, had a jobs summit. They had 130 people over to Washington, and I'm sure they had a nice big, meeting in a nice big conference room with a nice catering spread, and I'm sure they came up with all kinds of brilliant ideas about what people should do, right, for jobs. I'm sure they came up with taxes and subsidies and programs and this and that, and it's all nonsense. I actually have a client up in the Pacific Northwest who, right around the time of the summit, was actually looking to hire a salesperson for her business. She owns a very high-end landscape design business, and along with that landscape design business, she sells fertilizers and other products, and she's very environmentally friendly. It's a very cool little business. I think she only employs 10 or 12 people, but it's an interesting little business. It's very creative, and it has some some value in the economy, and she and her husband are very successful. And we were talking about this summit, and she said something that was, I thought, very, very telling, which is that she said, look, I know my business, I know my customers, I know whether or not I want to expand, and if so, how I want to expand, and I know whether or not I can afford to expand. I don't need the government, I don't need the president to tell me that I should hire people. I can do it myself. What I need is for the government to stay out of my way so I can make those decisions myself. I can make those decisions, I just need a minimum of interference, and I'll make those decisions myself. And it occurs to me in my view, and granted I'm a libertarian sort of economist, I look at things from a libertarian standpoint, but in my view I think she's absolutely right. I think business people at the end of the day are in the best position to make those kinds of decisions. So, if you're a small business person, you know kind of what you can bear, you know what your expenses are, you know what your income is, and at the end of the month, you know whether or not you can afford to hire more labor. It's really private business that makes the country strong. It's the private business that made the economy strong. It's what attracts immigrants. I mean, you're from another country, I'm from another country. I assume either recently or maybe even in this generation, that's what attracts immigrants to this country. It's not the bailout programs and the stimulus and the packages and the bills and this and that. It's the economy. The government people and people who believe in government, really creative, intelligent people say, well, we believe in the free market, we agree with you, right? But we just want to help the free market a little bit. So the economy is weak, there's a lot of unemployment, and we have no growth, so the government should step in and spend some money and get the economy moving again. That's what we need to do. And there's a big problem with this, because they forget that along with all of that government spending, you have to have taxes. Right? The government itself doesn't have any resources. The government doesn't produce, cell phones. It doesn't produce sunglasses. It doesn't produce, desks or chairs or podiums or anything else. Right? The government doesn't have any resources or production itself. The government taxes citizens and then collects that tax money, and then it can go out and spend money in the economy and quote unquote get things moving again. But the collection of all those taxes does impose a bit of a problem on the economy, because those taxes can have unintended consequences. Those taxes can actually reduce jobs. Let's say you guys graduate and you go out and you look for a job, and maybe you send out some resumes, and just to keep it simple, you get a job as an office manager, right? And somebody advertises for $50,000 a year, and you say, okay, this is good. It's a good start to my career. I'm going to go ahead and I'm going to make 50 grand and I'll be an office manager. Right? That $50,000 a year that you make in salary probably costs your employer more like 60 grand a year in terms of taxes and other benefits and all kinds of other costs that are associated with hiring you. So you're making 50, they're paying 60, right? Now the President Obama comes along and says, okay, we're going to introduce a spending program to get the economy moving again. This is what we need to do. The government's going to come out and spend a bunch of money, and we're going to get the economy moving again. Well, now that business is going to have to pay higher taxes. So let's say instead of $60,000 a year, right, that job that you have where you make 50 now might cost your employer $65,000. At $50,000, they can probably hire you. At $60,000, maybe they can afford it, they can kind of keep you on, but they're kind of barely making it. At $65,000, you might get laid off. Right? They may not be able to afford you at $65,000 a year. So there are unintended consequences when you raise taxes on business. You raise the cost of labor, and you make it more difficult for business to hire labor. So, what people don't realize when somebody like Krugman comes along and says, hey, let's spend a bunch of money, is that the government does not have any resources itself. It has to raise taxes. And so when the president wants to spend money, and get the economy moving again, in the process, you could lose your job because the employer might not be able to hire you anymore, might not be able to keep you on. So these unintended consequences are playing themselves out all throughout the economy. Okay? There was an op-ed piece in the Wall Street Journal, probably, I don't know, a couple months ago. It was written by a guy named Michael Fleischer, who is a small businessman in New Jersey. And I think he owns a company, or he runs a company that employs probably a couple hundred people. Not a huge company, bigger than Tina's. I think Tina's business employs maybe 10 or 12 people. Fleischer's company employs probably a couple hundred people. And he was talking about one particular employee that he named. He didn't name her, but he was kind of using her as an example, that he pays about $56,000 a year or two in salary and in benefits. And he was saying that $56,000 a year actually costs him about $74,000 a year if you factor in Social Security, Medicare, unemployment, workers' comp, all the funded and unfunded mandates that are imposed on business, especially in the side of labor and payroll taxes.